Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this video corresponds to a very interesting niche company, a small cap, a less than 1,000 crore market cap company that I bring to you, which is coming at reasonable level. So we'll discuss about that. First of all, a disclaimer that this is not a stock recommendation. Whatever discussions I have with respect to markets or stocks is purely on the basis of my experience into the market over the last 12, 13 years as a retail investor, and I am not a member of the NSE and BSE. So do consult your financial advisor before taking any call. Before I talk about this company, here's small request: support me on Patreon or on YouTube or WhatsApp. You get a lot of access to my portfolio, watch lists, and discussions on companies, global economies, domestic economy, the current situation that is going on, plus whatever queries you have, I do answer that. So do check the links in the description to be a member. Thanks a lot for all of you who have been members on Patreon and YouTube and WhatsApp. Now we go straight away to the screener website and we'll discuss about this company, Control Print Limited, a very interesting company. It used to be a top-notch company making new highs about a year back, 6-8 months back, but it has fallen from the top. So from levels of closer to 1,080 in July, August of last year, it has fallen appreciably to around 600 levels. If you see here, the stock has gone down from levels of around 1060 in January of 2024. So over the last year and a half nearly, the stock has fallen 40%. But what it has done is that it has come to a very reasonable level of 21 times current earnings, and earnings are growing reasonably. So let's discuss about the company first. So basically, Control Print is into development, research, manufacturing, and marketing of industrial printing machines, spare parts, consumerables, etc., fluids, and all. So they basically provide inks, inkjet solutions to printers, etc. So whatever parts of the printers that are made, most of them are made by a Control Print, and especially the inks and other things are made by Control Print. So the company operates two factories in, you said, Nalagarh and Guwahati, spread across 30,000 square feet. And if you look at it, uh, then if we go in detail, then basically their product portfolio, uh, they are into ink, continuous inkjet, thermal inkjet, high resolution, large, you can say, character thermal transferred laser printer, and consumable, etc. That's what they make. Their market share is, it is the only coding and marking company that manufactures in India. It has a market share of nearly 20%. 20% market is from there. So their revenue mix is consumables is around 61%, printers 16%, servicing is 15%, spare parts is around 8%. Consumables include your inks, inkjets, and other parts of printers that they provide to different companies. And they went for a strategic change in FY24, and for although it sold around 2,800 units with this high value items, high ticket items that they started selling, but what happened was the profitability and lifetime value of these sales have increased. So the profitability margins and profitability altogether has increased, although sales are lesser than what they used to be in FY22 and 23. And that's why probably the sales numbers has not grown that much, but profitability has remained strong on the bottom line, and the PE ratio has shrunk over time as the stock has collapsed from around 1060-70 levels. 3% of the sales is coming from abroad as well. In terms of their clientele, Godrej, JK Tire, Colgate, Supply, HUL, ITC, you name it, there are many huge client base that the company boasts of. So as I mentioned, it used to be darling of the market. If you see here, from January 22 23 onwards, from around 400 levels, the stock surged to around 1060, 1080, going up by 2.7x inside a year. Inside a year, the stock was up somewhere around, if I calculate this, from around 380 levels to 1070. So if I take 1060 on 380, then we are looking at a situation where the stock was up 2.8 times in a year. The stock nearly tripled, and what has happened is that although numbers from FY24 to 25 hasn't been that bad. So if you look at it on a yearly basis, in FY24 they did around 360 crores of sales and 86 crores of operating profit. On the bottom line they have done around 55 crores. Yes, numbers on the profitability front has dipped, and this is because of their shift to higher margin businesses, because the sales have dipped sharply. The numbers have dipped a bit, but I think they'll pick up, and that is why probably the stock has fallen, because the numbers have gotten flattened, but sales have overall grown 15% again year on year, and that is why the stock from FY24 to 25 has gone down 40%. So stock is down from around 1060 levels all the way to now 600. But this is an opportunity because companies do come back and come back big time in such spaces, in such niche spaces. One big deal or one big clientele could a couple of clientele could really change the things. Couple of clients coming in could really change the things for these kind of companies. We have seen huge buying taking place around the 660 levels, 660 to 720 levels. The stock is trading at around 600 levels. So if I talk about the numbers per se, in terms of the sales, on the sales front, 300 crores of sales, 304 crores in FY23, 360 crores in FY24, and this year they are expected to do around 420 to 430 crores of sales, which again gives me an idea that they're going to do around 65 crores on 360, around 18% growth on sales, which is nearly 19-20% was last year. This time they're going to do around 18%. Margins have dipped, that I agree, that the margins have dipped sharply, and we are going to see margins closer to 19%, 19.5% or so. But this is really the time, because the stock has collapsed altogether. If you look at the balance sheet, reserves has grown appreciably to around 340 crores, and there's very less borrowing. So in terms of liquidity, no issues with liquidity per se. If you look at ratios, working capital, 137 days is in there. Inventory days has remained stable altogether. And shareholding pattern, the promoter hold around 53%, which has remained steady. In fact, increased from around 52% a couple of years back to around 53%. FIIs hold around 3.5%. So there is a decent FII holding in here. So overall, very interesting company to look at. I'm not saying that it's going to just blast off and doing all the great things. But if you look at from the valuation point of view, I come to that again. On the PE basis, the stock is trading at 21 times. On a 10-year PE, if you analyze, we are looking at 18 times. So it's not very expensive at all. Another 10% fall from here is a huge opportunity, because then it will be trading at 18 times earnings, and if the earnings continue to be 18-20% in that vicinity on the top line, eventually profitability will come through, as they are focusing on better sales or a greater number of sales from high value items. So we'll see how that goes. So around 540 550ish level would be very good levels to get in big time, but from here one can accumulate from here till around 535 40 if that comes in, because the market is extremely volatile. We could see a 10-15% correction from these levels for these kind of stocks. Only a 908 to 1000 crore market cap company, probably 2.2 times FY25 the price to sales, which is again not very expensive. If I look at from a market cap to sales basis from a 10-year point of view, the average is around 3 times. The stock is trading at 2.2 times. So very interesting times for it. Remember that when we are trying to invest into smaller companies, companies with less than 5000 crore market cap, especially with companies less than 1000 crore market cap, which are considered in these times probably micro caps, we should be looking at a greater margin of safety. We should be looking at value rather than going after price. And in that sense, if you're patient enough for the next 3 to 5 years, at least for 4 5 years, I think this is a stock to look at. This is a company to look at, because downside is probably 15% from here, say 500 to 480 levels, 15 to 20%, but the upside could be big if things really get into place. The stock could trade at 29 30 times earnings 2 3 years down the line if earnings pick up. The PE could expand, and it's extremely difficult in these days to find out companies where the PE expansion could take place with the markets at a reasonable level, especially in mid and small cap. The markets have run up a lot over the last couple of years. So this is a very interesting company to look at from a 5 to 6 year point of view. So this was a video on control print. Please do subscribe to my channel. The subscription level is extremely less. Kindly do that. It will really help me. Those who are watching, kindly do hit that subscribe button. Thanks a lot for watching.